Hi everyone, K Kim here from Traders Club. This video is actually for the video live midweek update with K Kim event, because what happened today earlier, I think I had some technical difficulties. I think my speaker, I just tested it using my recording system here, and works just perfectly fine. I do think that there's some kind of a technical difficulties with any meeting. They had something there, so looks like probably going to be fixed tomorrow. So just today we had that. So I apologize about that. So I'm putting this video for you guys for hoping to get into a live midweek update. I apologize I wasn't able to do that. So I'm putting this video for this event. So let's get to it here. Looking at a spider daily chart, and today's move is a very significant because yesterday move was widely watched, because what happened was, this is a level that, here's what we've been talking about here at the Traders Club. What we've been talking about was this: as long as this level, and this is what I talked about, is as long as this level holds, where I have to assume that the bullish trend is gonna continue. But what happened was, on this day, this was the 14th, and next day 15th, we gapped down, which possibly looks like a breakaway gap. And then we broken below this pivotal level. You can see last time when we gapped up here, we gapped above, and then we kind of had that gap angle scenario. Well, we are having a completely opposite style of that, basically gap down and go. And so the question remains, well, are we gonna have, is this a pullback, and for higher, maybe like a pullback and then for higher prices? Well, that can happen, but something that I've been talking about is this. Well, one thing is that bulls really needed to protect this level for kind of a pullback to happen, because this was the pivotal level. That's what they are, pivotal levels, major resistance of pivotal support levels, and they're just minor resistance support levels. So obviously once we've broken below this level, well, what we are seeing is basically we're seeing a lot of weakness, because what we're seeing is bulls are really did a good job by breaking above this level. You can see that, and what they need to do, maybe a little bit of rest and continue higher. When they don't continue higher and then broke, because this becomes kind of that, if you're looking at a big picture, again, this is a daily chart, that becomes kind of more like a, if you're like more like a long-term investor, that becomes more like a, bear or bull trap kind of thing, because their levels need to be held before it can continue higher. So at this point, I am favoring bears. Ever since this happened, we've broken below this pivotal level. I changed my stance. I closed all my long positions except Apple and gold. I started shorting the market and shorting some other equities using put options, and what happened was, that's when I post a video, I think on one of these days here, that I think that we're getting into the true correctional mode. And what I mean by true correctional mode is because I think we haven't really gotten that true correctional mode compared to the move that we had. You can see that this is a move that we had that kind of a time, some correctional move here, and this was last year Thanksgiving. And last year Thanksgiving here weekend, we found some hammer there. We had a breakaway gap, and that thing just continue higher. And many thought this was a correctional move. I really think that we could have come down lower. And you guys remember that I was bearish on this one. As long as this level holds, well, this level didn't hold. Bears did not protect that level. So once this level was broken, I changed my stance to bullish, and now I'm bearish because we did not hold this level. So the question is, well, is this gonna be one of those things where we're gonna come down here about 100 SMA? You can see that. This 100 SMA here, and we're gonna just bounce back up, and that is a possibility that could happen. But here's one thing that I am a little bit worried is this. If you look at just look at this price action, and if you look at these levels, what happens is many times what stocks like to do, they like to use these pivotal levels, kind of a stair-stepping kind of a stone. What it does is once it goes clear that level, it gets up, and then what I mean, it gets up and use those level to kind of step higher. You can see that over here, but what happens is once we kind of step higher, it tends to respect these pivotal levels. You see that happening. So when it goes, when it trends, okay, when it trends, it respects these levels as a old resistance, new support. And this is something that I've been talking about quite a while. And what happens is, once that level is broken, there is kind of a trouble signal because that old resistance new support didn't happen. So there is trouble signal, which we had trouble signal here. So, many thought this was a correctional mode and we're done with the correction and we are going to go higher. And I said, okay, that looks like it, because even though we didn't have old resistance and new support because we broken below that and we kind of survived through it, I really thought that we're going to get to at least 174. But we really come off really short. We were not able to kind of maintain that bullish uptrend. And so because of that sentiment and because of that, because of that activity that I've just seen in last courses of several months here, this is a troubling pattern for me, because I am kind of, here, let me make this like this so you can see it better. What I'm looking at is this. Here, let me just do this so you guys kind of get the feel of it. Okay. This was back in 2011 May. But can you see some similarity here from today's move? Obviously, it's not exactly the same. And one thing that is, I study a lot of these different patterns, because I always say that in each individual equities and individual stocks and indices, they all have, its attribute, its personality, the way it likes to move, the way it likes to handle certain climates, certain circumstances, and the way it handles tough times, struggling times. So if you think that this is a struggling time, that's what it likes to handle. So this was kind of a back in 2011. There you can see that we kind of, what it seemed like a correctional move, and then we jumped back up and we find the support. And yet again, what happened was we cleared this level, but we're short-lived and we start coming down. And it still looked bullish. It still kind of looked bullish because we're above this uptrend support. But what happened was, well, we had some bounces here and there, but it couldn't hold. And what did we do was we made flat lows. Remember, the definition of uptrend is higher highs and higher lows, right? Higher lows, higher highs. But once we put in these flat lows, that's when you can see that it has, it broke the curse of higher highs and higher lows. Not a curse, but if you want to put it, it broke the trend, this uptrend of higher highs, higher lows, and start putting equal lows. What it's saying is basically we're slowing it down. We're looking at daily chart, and it's very, very important as a swing trader, position trader, if you are one, to look to understand where the market is going as a whole, so you can able to use that speed or use that direction to trade some of your individual trades, because you don't always want to trade in a direction where the market is headed. So what happened was, and then you can see that we found support. So here's the thing about this: 100 SMA, we found support, we went up, we're short-lived, we never made, truly never were able to amount to new trend, and then we kind of were short-lived. It was very, very similar to today's move, where we were not able to go further higher. We were kind of short-lived. And so when we came down, we had some bumps along the way, but we essentially came down. Where did we found support? At 100 SMA, and by doing so, what happened was we put in eco lows. All right, we put in eco lows, and then it went back up. But what did it do? It never was able to put in. What? Higher high. You see that? This was a high. We put in the eco lows, right? And we put in, for the first time of this uptrend, for the first time we put in eco lows and we put in higher low. In that process, what did it do? We made this massive, gigantic head and shoulders formation. And once the neckline was broken, once this double top was confirmed at the top, there's a lot of pressure coming down because we were not making high. We did not make higher high. We made a lower high. And then so rest was history. We had this crash. See that right here. So let's look at today, and I want you to just remember what happened there. Look at today. And I'm not saying that that's exactly how it's going to happen, but it has this sentiment, and it has high probability it's going to play out something similar. Not exactly the way, something similar. Look at this, 100 SMA, that's where we found support. We kind of looked like this was a correctional move, but we went to 100 SMA, we jumped, but we were short-lived. We did not make, you know, we were just hanging around at the top, but we were not able to thrust like this like we did back then. Because once we clear these highs, and make, you know, this old resistance new support, it tends to make certain amount of bullish move to the upside. But once it comes down, you know, once it comes down like this, not able to move higher, so then, you know, what I see the sentiment change. Like bulls pushed it up, but they were tired. And I'm gonna give you proof of that looking at MACD bearish divergence, because bearish divergence, that's what it measures. It moved higher, but then it was tired. Okay, so anyway. Before I get to that, I want to talk about this. So 100 SMA, we found support, we went higher, we was short-lived, just like back in May 2011, and we came down, and we're right at the support. And you know what? I won't be surprised this thing going back up and doing something like this. But what I want you to look at is this. If this thing starts to come down to here, and it does something like this, and it put in equal lows, and by the time this thing comes down, you will see this is 200 SMA, and come meet like this and finding support at 200 SMA. Where did we see that happening? Back in May, June, July 2011, when I was just previously just demonstrating that could happen. And if that happens, this could gap back up. And if it fails to make higher high, but it comes to make higher lower high, well, in that process in making what? In this gigantic head and shoulders. If that happens, ladies and gentlemen, I think that we're due for some serious correctional move. But here's why I was, you know, after we broken below this level, that's when I did a video blog saying that we are probably going to be due for correction move. Here's one of the big reasons was this. Let me go to spider here. Not only just a spider, it's all diamond and, you know, all other indices as well. So remember when I just compared to earlier today or just now in this video, that, you know, this move right here looks, in my opinion, looks very similar to what? Back in 2011, May, June, July, right here. But not only, you know, the chart pattern telling me the similar activity going on, but also MACD is kind of condoning my, you know, my thought on that. Basically, you can see that we made a higher high here and MACD made a lower high. Basically, we put in this bearish divergence and something like we did back here. And does not mean that, you know, just because there's a bearish divergence that it needs to have a correctional move. But when it is confirmed with the chart pattern, and you guys remember I was pretty bearish over here as well because of bearish divergence, but never played out. This one never played out, but it has a good ratio. You can see that this time played out, this time played out, this time played out. It has a good ratio. We're just looking at about 2 years chart, and I could go back to about 10 years and how well this bearish divergence plays out, and is early indication of a correctional, you know, move, at least a pullback. But usually these are, and it's not 100%, but it's up there. It's about 70-80% or so from my research. So not only we have and also with the bearish divergence, you want to make sure chart pattern is confirming to the downside, and plus the bearish divergence, that just kind of adds to that fire. So what we're saying right now is, you can see that not only we have a very similar sentiment of last 2011 May, June, July, but we also have a MACD divergence confirming the bearish divergence happening here. And so with that and both confirming here, that's kind of what I'm thinking, is that this thing coming down, this thing coming here, getting back up, and we're going to do something like this, we'll do something like that, and then a correctional mode. Doesn't mean it has to happen just like it did here, but I think it has high probability. It may not look exactly the same, but it's going to look something similar when it does start to. But first things first, we need to put in these equal lows, because remember what I talked about, once we put in those equal lows, it is the break of that uptrend. That's why that's very, very important, because definition of uptrend, higher lows, higher highs, but we put in equal lows, that's a break of an uptrend. So that's kind of what I'm looking at as far as a kind of a little bit of longer term is concerned. But as far as like a shorter term is concerned, the overall market, obviously, you know, this level is to watch, and we can even bounce from this level, and you can have all kinds of bounces, guys. But as long as this level right here, I want you to watch this level right here, 167, 167.50. 167, 167.50 level holding. If bears protect this level, it could have all kinds of bounces, but failed to close above this level. Not able to do this, but we hang around, come down, hang around. If we start doing this, get ready for about 157. So about 160, so about 10 points there in these two right here. This the ratio about the space between that, that's about 10 points, and this level is a level to be watched, and this level is a level to be watched. This is what I call traffic level, traffic area. Basically, we could have a bounces, but if we fail to break above this level, sooner or later it's going to come down. And when it does come down, it's probably going to find bounce, and then probably that 100 SMA is going to come and hit that level, and we're going to come back up. And then in that process, if we fail to make higher high, but we make lower high, then we're going to make this head and shoulder formation. When they do, this thing is in serious trouble. So, again, just looking at maybe next few days, maybe tomorrow, with the Fed minutes today, what we saw was pretty much, we had a very panicky overreaction today, just going back and forth like several times today. This is a reason why I don't pay too much attention to intraday action. I want to know where it opens, where it closes, and this is where we open, right? And this is where we close. That wick right there shows a volatility was there, but this looks more like a bearish pennant or some kind. It looks more like a bearish, bearish continuation pattern, though we are getting into that support level very, very quickly here. You can see that 100 SMA coming in here. If I just draw a support line right there, you can say this is a level that is being held, so we can bounce from that. But because we have a little bit more pressure coming this time around, rather than these times, okay, let me do this. Because a lot of people, because you can't just draw a support level and say that you expect to bounce and start going long here. Well, unless you're a day trader, you're intraday, you're getting in quickly. If you're a swing position trader, what I mean by swing position trader, like at least you're gonna stay in the trade for a week to a month, sometimes few months. If you're, then that's not recommended. You obviously want to see that, because here's the thing about that is, yes, this level held many times, so this may be the level that is going to bounce. Yeah, there is a probability that we can bounce from this level. However, I just talked about with a bearish divergence happening there, and also not able to thrust higher in this vicinity, kind of like back in 2005, we weren't able to thrust high, we weren't able to establish something. So this feels more like a kind of a weak move to the upside. So that, I feel like there's a little bit more pressure coming down this time rather than here and here or here or here. We did not have a bearish divergence here. It was slowly coming down from this level. But what happens is, this time around, we had another try to the upside, and we broken this pivot level, but we were not able to establish certain size of a uptrend. You see that last time, this right here, it looked like this wanted to come down a little bit, and we survived that. Look at how much it moved. It moved well. It moved pretty well. You can see that over here too. This one had its courses of move. But this one, we cleared very major pivot level. Okay, this is a major pivot level, and we didn't even, I really thought we were gonna have a more lower corrected move, but we survived. We had this grinding move, and I thought after this we really gonna have some, at least to about 170. You guys remember that I wrote an article saying that Spider is going to 174. Well, it didn't go to 174. It stopped short about 171. And then so because we were not able to really establish anything, I really feel like, there's more weakness coming in here with the bearish divergence. On Spider, there's a little bit more pressure coming down than this time around, or this time around. Okay, so obviously this level is to watch. We could have some bounces here, But once this level is broken, probably the next level A watch is this level. Okay, so these are two levels I am watching. We're focusing here at the Traders Club. This is where I call it traffic area. As long as we stay inside in this area below 167, it's gonna be bearish. In my opinion, that's gonna be bearish. And plus, you can able to see that we got 10 and 50 MA crossing here a little bit. So this time around, because the last time 50 MA held, there's such a great support for a while. Well, it has been compromised at one time, so now it started to lose its integrity, and so it did not even respect it this time around. So I want to see if 100 SMA is respected in the next several days. So that's the level to watch. All right, so we might get bounces here and there, guys, but again, as long as we hold 167.50. and it's not able to, we keep this gap open, which I think the possibly breakaway gap, is sooner or later, I think that it's going to come down to about 157, 158. All right, so that's my analysis. I'm still standing. I'm still, my stance is same. I am bearish in the overall market. I am going in with bearish positions. So. Let me go through some of them here. Let me actually talk about Apple. I know that I've been blogging about that Apple. You guys remember? I went essentially. I've been going long here, and it got stopped out here. I went back long here, added some there. I closed out here and here. I got stopped out there, added back here, added some more there. I took off some there, took off here, and now I'm just holding very small position, but I'm probably gonna get stopped out sometime tomorrow. So here's what we're looking at here. I've been blogging posts. One of the things that we've been watching was this level. This is a major resistance level. You can see that this is a level last time we hit it hang. This was a level that made this thing go to about 380. And so obviously this was a level that it was going to struggle, because we all know that stock doesn't go straight up. It needs to make higher highs and higher lows, and we are making some kind of higher lows here, but in my opinion these lows are pretty pitiful. We need to make more solid lows and highs, these bigger swings, to be able to make that uptrend a little bit more solid. And so that's the one area that I was saying that people ask me, how the heck did you time that to get out most of your position? Well, first of all, it was this level, and second, look at how extended it is. And I don't like to just call things like extended, it's due for a pullback or due for a correction. I don't like to use that kind of word like do or should, because market doesn't have to do anything or should do anything. It can do anything it wants to do. But my thing is about probability. This thing very well could have gone higher with the high emotion and hype. However, I'm looking at it as, I don't care if this thing goes higher. I'm satisfied with my ROI here, and there's a good probability that we're gonna pull back, just because look at how much it moved. Not only we were running onto this level about 515 resistance, which I've been talking about for a while. Also, if I go to weekly chart, and I've been talking about watch weekly 200 SMA right here. You see that? This is the last level on the weekly. We're trading above all the moving average. Last level was that 100 SMA on weekly chart on Apple. You can see that we're struggling there. So now, not only have 100 SMA there, you know what? Let me put up Fibonacci and see, because I didn't even look at Fibonacci. You see if we have anything. Well, voila! Look at that. I didn't even do that. But this is one of the reasons why I love technical analysis, is because of this fact. Everything, when you see all these things line up like this, confirms each other, that's when the true beauty of technical analysis comes alive. And you've seen that. Because basically what we're seeing is, when you go to daily chart, you can see that this level right here, this is a 515 pivotal, major resistance level. And then when I go to weekly chart here, we had a last level of this 100 SMA on the weekly chart. That's where we're struggling. And I just measured this to move, and you can see that you can have to see that this is a 38.2% Fibonacci level, and we're slow. At least we're slowing it down. And so that's that basically, again, it could have gone higher with so much so much hype and so much emotion and publicity that it was getting lately. It could have, but with the market is market with a bearish sentiment, you know, it was gonna be a tough deal, and then that's what we're doing. We had a shooting star and with a bearish engulfing, and today, you know what though? After shooting star with the bearish engulfing, you wanna see something like this next day, because we got a little tiny candle right there. This could become a bull flag. It could. It could. We can still find some support here, and this could go higher. So you can, because the fact that we kind of hung around. You know, I was really looking for something like this, more like a tankage or something like that. I thought that possibly that could be happening. But because we kind of held, you can kind of pass for bull flag. Obviously, bull flag needs to be confirmed by breaking above. If we see something like this, we could very well continue. But with the weak market state and the shooting star bearish engulfing, if we start breaking below this level right here, about 500, well, that's also a psychological number. I think 490, and I think it could also come to 470. Let me go to weekly chart again. And one thing we talk a lot about is this: any double top or double bottom or head and shoulder formation, what it likes to do is it always likes to come back down, retest levels, old resistance, new support, and this is the level that you want to re-enter when it comes to that level. That's about 460, 470, 460, 470 area. I'm not quite sure which one it's gonna be, but that's kind of what I think is gonna happen if 490 doesn't hold. 490 is just a level that we found support when we had that bull flag here. You can see that that's a 490, so this could come down and continue higher, and that even then that pullback is actually healthy. Any pullbacks and higher lows and higher highs always a healthy thing. So those are the levels I'm watching there, and I tightened my stop today. So if this thing comes lower than 500 tomorrow, I'm probably gonna get stopped out, and I'm waiting for this thing to come back to even one of these levels, and I'm gonna be watching see if it's gonna bounce or it's gonna come lower to re-enter long in one of those levels. So those are the levels I'm watching here. Possibly this level, but I don't know how well that level is gonna be held. So those are probably 3 levels that you wanna watch there, I guess. But I think mainly this level and this level that I'm really more likely I'm watching. So that's kind of my thought on Apple there. What else was there? Gold. Talk about gold here. Gold, you guys know that we had an inverted head and shoulder here. I went long here, added some there. I closed out some here and here. I also closed out some when it was just below that. So I'm holding a small amount because I'm waiting for a pullback to add some more. So where do you think it's going to come back? Well, I think that it's going to have a retest of this inverted head and shoulder. Again, any kind of a double bottom, inverted head and shoulders. What it likes to do, once it breaks the neckline, this is a neckline, it wants to come back down and retest as a new support and then continue higher. Obviously, 200 SMA is acting as resistance now, and so this is a level that I'm watching. The worst, though, however, they're not going to, they could respect it like a textbook, but gold, it gets its shenanigans. What I mean is that you might get something like this. You might get some, just something just crazy. Since we're still fighting this downtrend, you can see that when we came down last time, you see the shenanigans happening. So that's one thing I've been talking about, is that I don't think that, we've been having this perfect, symmetrical inverted head and shoulder on GG, but it doesn't look like that on GDX or GLD. That's why I chose GG, because it had a more of a symmetrical, well-maintained and respected technical levels and values on this chart. So I think we can see this thing coming down and continue higher, kind of old resistance, new support. But I wouldn't be surprised this thing coming down even lower, even to threaten this gap here and then bounce. So you gotta kind of, you remember once in the earlier of this video I talked about, when I was looking at the pattern of spider and I was comparing it to 2011 May, June, July. Well, I said that each indices and equities or ETFs, they have certain attributes, personalities. Well, this is a gold's personality. Gold is not going to perfectly respect these levels. Apple seems to, one of the reasons why I love trading Apple, my favorite stock to trade is Apple, is because Apple really respects these pivot levels and these, it always seems to line up, at least for my technical analysis taste, my swing trading setups and whatnot. But gold, I know gold can do some shenanigans. So that's kind of, expecting something like that. They're expecting that it's not going to perfectly bounce on these levels. So those are the level to watch. We're probably going to have a pullback there. And let's see here. I'll do two more here because I wrote a blog about XLF. You guys remember I wrote a blog about it. I went short there on a pullback because again, this broken below this level right here. This was a gap. This was a major pivot, and then so I went short on that pullback there. And this looks like a bearish pennant. Again, this looks like a bearish pennant because of today's action. You can see the 10 EMA, 50 EMA also crossing there. Also, if I go to financial sector and the financial sector here, financial sector MACD here, we have a bearish divergence. This is what I'm talking about. Financial is kind of an internal strength of the market, and once financials start to kind of go down, that's kind of a big, that could be a problem because if you want to see financial to do well in the overall market. Let me just give you a quick glance at this comparison chart here. This is Spider versus financial. You can see that any major downturn, you usually see this divergence going on, and that's kind of usually the early indication before this thing comes down here. So you know, this is Spider here, and this is a financial. So that's kind of what I'm looking at here. And financial being weak, that's definitely something to watch out for. We got a MACD divergence happening here, something we happen back here as well. And so those are the level two. That's definitely something to keep an eye on. You got a MACD divergence over here that played out there and here as well. So definitely something there. And not only that, we have a chart pattern confirming because we have broken this major, you know, because what we're looking for was old resistance and new support. Well, that didn't happen. That failed. And so next level is basically 100 SMA here. We bounced there, and so we could bounce, but again, what I said on Spider, as long as we hold this level, it could go lower. And again, pretty much similar to 100 as Spider there, we could have a head and shoulder level here. We do not have that kind of evidence that it's going to, but once we put in equal lows, that's what happens is we have broken this uptrend, you know, basically making higher lows, higher highs. So if this thing going to continue higher, we must bounce and we must make higher high. But if it bounce a little bit, it come here, find resistance, comes down and put in equal lows, that's when you say this whole trend is dying. It's dying. It's going to have a bounce. This is when everybody's going to say the market is going to continue and we're going to go to a new era and everything's going to fine. Well, that's a denial phase. That's how the inverted head and shoulder are made, because we have those denial phase, and then true power or the potency shows how the inverted head and shoulder forms there. Let me look at lastly, I look at Citibank. This is another one that I put on a blog post there. Well, pretty simple. We also have a MACD divergence on Citibank here, as you can see that I annotated here. Some of these divergences are it has a good ratio of becoming that early signal of topping pattern there. And we have this gigantic double top M pattern for murder, and we have a mini murder pattern here. So we've got mini M broken old resistance, new support band, and we got a big one coming here. We break below this level. Well, Citibank is really going to be murder, and there will be a crime scene investigation everywhere. But, you know, so basically, you know, once we broken below this level here of this mini M pattern there, this is where I went short. Yesterday, as a cautionary measure, I did close 70% of my positions because of the fact that we found some great support at 100 SMA with volume. Today, when we got back up here and I saw the weakness in the overall market, I think that was before the craziness happening on the Fed this morning, I added more right at this top here. And well, thankfully it worked on my favor, because it didn't look like it was going to work for my favor, because it was really volatile all day. It was up and down. But at the end of the day, you can see that this looks like a what we call bearish separation line. Basically, a black candle, white candle, black candle, which is a bearish continuation pattern, and looks like it wants to come down here. But we're at 100 SMA, so we'll see if the 100 SMA finds support there. I mean, I always say the 100 SMA being a 100-day moving average, it carries a radiation of support. So it could come down a little bit lower, we can still find support. So it could come down lower, find support there. So, but just because there's a lot of weight coming down. There's a little bit more weight there. We got mini double top, big double top. You know, bearish divergence. The market is weak. 10 and 50 already crossing here, and we already have a bearish continuation pattern. So I won't be surprised. You know, there might be some bumps and whatnot, but I think that sooner or later it's going to come to this level, and at the same time we're probably going to meet with 200 SMA and see how that happens then. And that's my stop, or that's the my target there. About let's see about 45.50 or so, 45.30, but that's level watch the 200 SMA there. So alrighty, I think that's all I got for today. Again, I apologize that the any meeting you know, the platform was having some kind of technical analysis issue, but it should be fine starting tomorrow. So you know, I do this event on a monthly basis, but I do have SK anything event, which is coming, you know, I think first Wednesday of the month is SK anything event, and then third Wednesday of the month is a live midweek update, which is what we're doing tonight. And so so again, that's why I wanted to put this this video up here. It's about 36 minutes. So these are, I think you know, some of the stuff that I talked about on Spider, I firmly believe that there's high probability that it's going to happen, but you know, doesn't mean it's a probability, so doesn't mean that, you know, it can't not bounce. But I think that with the amount of a pressure that we have in the overall market, even with today's action, I think it's showing a lot of signs of weakness, and it feels different than you know, it feels different than last time when the dip buyers came in. So keep an eye on those. So have a great week, and again, if you have any questions, feel free to you know, go down to your little comment thing there, and you can ask me questions there, and I'll try to answer as much as possible, as fast as possible. So all right, happy trading this week, guys, and I'll talk to you guys later.